The first thing on our list, we're going to talk about the update to the Form 17T, proper receipting procedures, the community crossing grant, and the changes in that. Lori's going to talk about some, well, more or less reiterate some things about the community crossings grant and the redevelopment funds. I know this is a little bit small, but I just kind of wanted to put it in a slide. There were some minor language changes and a little bit of formatting changes in the 17T. And I'll pull it up in a bigger view so we can see it. Maybe. So if you're looking at the new, and we have sent this out to the vendors, so the vendors do have the updated one. If you still have some of the old ones, it's fine to continue using those. The biggest change is just, like I said, it's more or less language. You're going to use it for the same thing that you did before. I added some language to the section where the refund, where the interest is calculated. Just reformatted it a little bit and added a little more explanation of how you calculate the interest. And then the section where it says reasons for refund, that's where the primary changes were. It's just language. We made it agree with what the new statute says on that. And then the second or the back page, depending on how you print this, where it says the instructions to the county auditor, there was some language changes in that as well. But like I said, the functionality of it hasn't changed. It's just some updates and formatting on that. And they should be available from your vendors or your software companies anytime soon. Moving on to the next subject, which I know everyone is just going to love, and I'll duck when everybody starts firing at me. We actually put this article out in the recent bulletin, so if you read the most recent bulletin, you're already aware of it. This is not anything new. We haven't changed anything. These procedures have always been there. It's in our accounting manual. But what Lori and I have found out recently through phone calls, emails, we're finding out more and more that the auditor is collecting money that they shouldn't be collecting. So we wanted to just make sure everybody's on the same page here. But going through there's basically 3 fees that the auditor is allowed to collect. That means that's what you're allowed to take the cash for. The certification or copying of documents per Indiana Code 51438, it's the $5 fee, and the copy fee not to exceed the greater of 10 cents per page for non-color, or 25 for color, or the actual cost of the agency for copying the documents. The other fee is an endorsement made on a deed per Indiana Code 36-1114 and 36-918. If it's established by ordinance and the fee's not to exceed $5. And then the other fee is the recording fee for tax deeds per Indiana Code 6-1.12520. The recording fee collected according to 20, now here it says it's the recording fee based on the recording statute, and then you submit the tax deed directly to the recorder. So it's a little bit weird. We don't know why they did it that way, but per statute, the auditor is supposed to collect that recording fee for tax deeds, and then you take the actual document to the recorder and have it recorded. So those are the only fees that you are supposed to be collecting. You shouldn't be collecting fees from the departments when they bring the report of collections. You shouldn't be collecting any other fees that you might have locally at the county. I think we had one that maybe had a sewage or trash or something fee that they were collecting. The proper process, the treasurer should be collecting all other monies other than what the individual departments are allowed to collect. The receipting procedures, the county auditor prepares, and this is where we're getting a lot of the questions. This description here about the 4-part form, it's the prescribed form we have in place right now. And as we say with any other form, you are able to use alternate forms that provide the same information. You put them in use, then when we come out to audit, you let them know you're using a non-prescribed form. We look at it, and as long as it provides the same information, functions the same as the prescribed form, then we don't have a problem with you using it. So the procedures here, don't get too caught up on the 4-part form, the names of the forms, as long as you're doing the process and using forms that pretty much do the same thing as these prescribed forms. So the way it talks about it, the county auditor would prepare the 4-part form to show the date, the funds to be credited, the amount, the person applying to pay the money into the county treasurer, and in the space on the account of shall show the source of the payment and the specific account number or numbers to be credited. So the auditor, they're going to come to you with money. They're going to tell you what it is. You're going to decide which funds it needs to go to, the amount, and then that is taken to the treasurer. The treasurer actually counts and collects the money, and hopefully it agrees with the amount they just told you they were paying, and then the treasurer will issue a receipt, and that receipt comes back to the auditor's office. The auditor will verify that the amount that was collected from the treasurer is the amount that they had divvied out to the funds, and then you will quietest the money in. So that's the process. And we're more concerned about the process than we are the actual forms you're using to document this process. It could be that your software does it internally in their electronic forms. We do need to learn a little bit more about what everyone's doing or whether they're doing this process. Lori and I are meeting today after the meeting with the vendors to discuss this. To see what's in their systems, how they're handling this. So if you have a vendor and you have a question about whether, you might let your vendor know that we're meeting right after the meeting today, and they're welcome to come in and be a part of the meeting where we're going to discuss this receipting process. We know that there's going to be instances where checks may be mailed to the auditor's office rather than the treasurer's. Again, you would take that over to the treasurer as soon as possible and let them know this is the fund that it goes into. They receipt it in, and then the same quietus process. We have had a couple, at least recently, we had a problem. And the one thing you want to realize that these segregation of duties are there for a purpose. Recently, we had an auditor that brought over money that they had collected from a department to the treasurer, and the amount that the treasurer counted was not the amount that the auditor had indicated had been collected. Now the difference, don't know whether it was there when the auditor collected, whether there was a variance when the auditor collected it, whether the variance occurred while it was in the auditor's office, but you're putting yourself in the middle of that process. You're putting you as a responsible person or a party to that money. And that's not the way it was intended, the structure. I know you don't like it or the processes. It seems probably a little overwhelming or cumbersome, but they are there for a reason. That's all I wanted to say about the receipting process. I'll take any questions.
Yeah, so you're saying that we're only supposed to be collecting the transfer fee, basically? Who collects the disclosure money?
The disclosure money?
On sales disclosures when somebody comes in to transfer their property. There's a $5 transfer fee, and then there's a $10 sales disclosure fee. And then what are all these people supposed to do if they have to stand in line at tax time to turn money into the treasurer?
It's not the auditor's responsibility to collect that money, is all I can tell you. Like I said, I know it's not a good process. Now the disclosure fee and the transfer fee, I would actually have to look up the Indiana code to see what, the codes that I cited says the auditor is to collect that money. unless it says the auditor is to collect that money, then the treasurer is to collect the money. Are there more questions?
Well, anyone can put a change in. It doesn't have to be the original to your ledger committee.
Should I duck now?
Okay, I'm sorry. Could you repeat what you said about the sales disclosure fee? What needs to be done with that?
I said I would have to actually look up the statute for the sales disclosure to see who's to collect that. I couldn't answer that right off hand,
Okay.
but these are the statutes that we're aware of, that we've always had, that says that specifically says the auditors to collect them. So without looking at the statute offhand, I can't tell you, unless it says the auditor is to collect that, then the treasurer should be collecting all other monies. Pauline's back there waving her hand too. You're gonna have to wait, Pauline. She's got the mic.
I have a new treasurer, and she's getting a stickler for the codes. And on this, not this page, but one back, it says the forms have to be pre-numbered by a printer. So how can you use different forms if the
you're-
alternate forms?
Yeah,
that
they
you-
should still be pre-numbered. A lot of the software systems, just like any other receipt, when you write a receipt, it will number it. The next receipt you write will have another number.
Because we're using the reported collection as the pay to, and then doing the quietuses.
I'm sorry, repeat that?
We're using the report of collections as our pay to form that you're saying that we need? Yeah. And then doing the quietuses.
So you just, now you're not collecting?
Yeah, we're doing, the recorder, I mean, the treasurer's getting the money and counting it, but we're using that report of collection form.
As the pay to,
that- yes,
application
as
to
the
pay?
And they're saying we can't.
Again.
That's the way we've always done.
Yeah. And technically, you should be using something like the application to pay. The difference with what you're doing and the actual application of pay, the application to pay would come from the auditor. The report of collections is coming from the department. It's got the same information on it.
So you're going to make the people come to my office, we do that form, then they have to go over there, and then they have to come back to us for the quietus.
Yes, that's the correct procedures.
We can't do, that's not,
I didn't make the rules, people. It's in our manual. I can't change them.
Segregation of duties, okay? And that's what she was talking about, when it works fine until it doesn't work, and then you're asking us, what do we do? The treasurer's saying, what do we do? The auditor brought over the money and it's not all there. Who's responsible for that? If you're following this procedure, as cumbersome as it is, the custody is changing hands at specific points, and you have a paper document to show that. There is an inherent segregation of duties between the treasurer's office and the auditor's office. You guys post the records, among a million other things. The treasurer takes custody of the money. When you start blurring the lines, you got problems. You're going to end up with problems. So as cumbersome as it may seem, it is the process that should be followed. And if I want to pay, I follow that process. Okay, more questions?
I know for our tax sale, when people come in with a lot of money into the auditor's office and they want to pay off the amount due on their home, of course, we figure it up, but then we hand carry the receipt to the treasurer's office, and that person hand carries the money. We refuse to receive the money from them. We actually both go to the treasurer's office, and in that point, the money gets exchanged, and then the forms and whatever are taken care of again after that.
And that's fine.
That's fine if you want to do that process. It's up to you how you work that out.
Both offices then will initial the receipt so that we've got initials from both offices. But on these smaller ones, yeah, sales disclosures, I mean, we do write the quietus in our office, and we do take the money to the treasurer's office, and then they do initial that they found they have the same money that we have, but we don't, the treasurer doesn't write the quietus.
No.
The auditor does,
No,
right.
the treasurer has their own receipt that they provide, and then it comes back and the auditor would quietus it in. But I know what you're saying. They don't,
Right.
no, the treasurer does not quietus anything in, no.
Right. So, but yes, I mean, everything is countered, we do it together
Yeah.
every time, yeah.
No, Pauline.
Okay, our question is, if someone comes to our office with the money, are we supposed to count that money before we put it on that? If we can't touch that, how can we put an amount down when we've not touched it and we cannot verify that that's the amount?
You don't need to verify the amount. If they come in and say, I have $500 for this fund, that's what you submit as the application to pay, the name of the first form. They go to the treasurer. The treasurer will count it. If it doesn't agree at that point,
Yes.
the treasurer and the auditor need to communicate. If they still want to deposit, maybe it's only $450.
Yeah.
The treasurer can accept the $450, write a receipt, but when it comes back, you will have to change it to agree with the amount that's actually accepted. You can only quietus in what's accepted, but the auditor does not have the responsibility to count that money when they bring it in. It's just a communication to them.
Okay, and we don't have the responsibility for it being incorrect amount. We
Correct.
we need to just take their word for it,
What-
that that's what they have.
Well, and that's why it's called an application to pay.
Okay.
This is what they're telling you, and you're supposed to decide what fund it goes to.
Okay,
Now, if you really don't want to touch the money.
Okay.
It really isn't your job to touch the money. And if there is ever issues like the situation that Lori dealt with just a couple weeks ago, the auditor had the money. The department's saying, I gave you this much. When it got to the treasurer, there was less. So now who's responsible for that? Did the auditor count the money when they took it? I don't know. But you put yourself in that responsibility. But the treasurer is only going to receipt in what is brought to them. If they come back and it's less or a different amount or more, then you'll change the quietus amount before you enter it in. The application to pay, honestly, is just to let the treasurer know when that goes over that this is the amount and the funds that they're supposed to, so that when you do those balancing of funds that the treasurer has and the auditor has, that's to help keep you guys both on the same page. Because the treasurer can't decide what fund it comes to when they bring the money. That's not their job, to say it goes to this fund and this fund and this fund.
Okay, I want to intercede here, as long as the phone stays up for me. Indiana Code 6-1.1-5.5-4. And this is on your sales disclosure fee. It does say, a person filing a sales disclosure form under this chapter shall pay a fee of $10 to the auditor. So that is an auditor fee that can be collected. We'll correct that slide.
Yeah, we'll add that. We are in the process of updating. This came from the manual that's currently there, but we're in the process of updating the manuals. So hopefully we're going to have those out soon, and we'll add that fee to the new updated manual. Can you repeat the Indiana code for that?
6-1.1-5.5-4. There you go.
1.1
Dash 5.5-4.
5.5-4.
Somebody had a hand up. You're okay? Somebody had a hand up.
I believe it was 1.1-5.5-4.
Good memory. I have a question. When the person who has the cash or money brings it to the auditor's office, they're to leave our office with two separate forms. One is a receipt, and the other is an application to pay? Is that correct? It says, literally.
Well, here's the thing. The old forms were carbon copied, layered 4 forms. So when you filled it all out, all the same information copied down, and yes, there was an auditor's receipt in there that got carbon copied, and what would happen is the auditor's receipt actually would stay at the treasurer's office as their reconciling part, and the treasurer's receipt, because they sign it, went back to the auditor's office. But they would also keep the application to pay, which has the same information. So that's why we're meeting with the vendors to see how their systems are designed and what kind of forms they're printing out for this process. And like I said, we are way more concerned about the process than the actual forms, but we are meeting with them to discuss this and see. Again, this form is from like 1942. So the form itself has not been updated. The process should still stay the same, so we may have to update to a new form or maybe a new terminology for the forms, or and that's why we're meeting with the vendors, so we can get an understanding of that and see if we can get on the same page and maybe do an update of this so we don't still refer to it as a 4-part form.
Okay. I have a question about when the departments bring money to us currently, they have a report of collections. Would that suffice for the application to receipt?
And that's what she had asked before. Not necessarily, because the
Okay.
auditor should still be filling out something that says these are the funds that they go into,
Well-
which is what they take to the
Well,
treasurer.
those forms typically have those funds, and I was thinking of stamping it, but my last question is, on the quietus, we now have 3 copies. One we retain for ourselves, one can go to the person who brought us the money, and then the other one goes back to the treasurer. Is that still going to be necessary, since they have all that other information?
It's not necessary, but if that's something that your county decides is the best way to keep things working, you can do whatever you want as far as that. If you want to, we're never going to tell you you're doing too much work. But, you know, yes, they should already have the application to pay and the receipt information that they need to reconcile with the auditor's office when they quietus that in. So,
And the form that's outdated, it's just 4 copies of the same form. They all look the same. So you've got 3 of them, and you just add a treasurer's receipt to that, then you're doing it.
the only difference is the last 2, the treasurer's receipt is going to have the treasurer's signature on it. The application to pay will have the auditor's signature on it, and then the quietus will have the auditor's signature on it. So that's really the only difference in the forms, is who's certifying it or finalizing the form itself.
In our county, we do use our system to accommodate what you're describing. When we receipt money in, it's unofficial. It does not have the treasurer's signature. We have 4 copies are printed off. You don't have to have 4, you can have 3, and use a receipts journal at the end of the day to reconcile. You give the person paying 3 copies with the auditor's stamp. It's unofficial. They take those to the treasurer. The treasurer counts receipts and stamps. The customer keeps a copy, the treasurer keeps a copy, and then they send a copy back to us at the end of the day that we reconcile to our receipts journal. If there's any discrepancies, then something's going to be rectified at the end of the day, either voided or whatever. We've had 1 incident in 3 years where someone walked out the door with their receipt and from us and $20. They did not have an official receipt. So our systems do accommodate the same process.
And that's our primary concern. And I know and like I said, the form itself is an old form. We know that things have changed. You know, the electronic process is, in most parts, adds to the controls. So, and that's what we're hoping to get is a better understanding of what these systems are doing internally. They may not call them this form. You know, we just need to get an understanding of what they're doing to see if that process is okay what kind of control procedures there are, because there still needs to be in the system a segregation where the treasurer can't approve a quietus and the auditor can't issue a treasurer's receipt. I mean, there has to be, if you have a shared system like that where the process is going to be electronic or something like that, you still need to have those controls in place. And that's what we want to get an understanding of, is what's available and what each of them are doing, so that we can figure out if we need to update a form or make a new one, or, you know, call it whatever. But I don't think the form is the issue. It's just the process. Yeah.
This may be redundant, but when someone comes in with cash or check, we send them to the treasurer's office. They handwrite a receipt. They send them back to our office with the receipt, or they bring them back. Then we have a 3-part quietus also that we both stamp. So are we compliant with that?
Yeah. I mean, we don't care if you're issuing one quietus, because a lot of, and then some still even use the carbon ones, you know. So if you have a 3-part and that works for your system, you keep one, treasurer gets one, customer gets one, you know, that's fine. Oh, did you say it goes to the treasurer first? Oh, I'm sorry, I thought you said it went over to the treasurer. So what are you filling out? I mean, they go directly to the treasurer?
However, recently, we don't touch any money in the office.
And you
We
shouldn't.
send them directly to the treasurer's office. The treasurer handwrites a receipt from her receipt book, sends it back to us, sends them back to us. We issue a quietus with our stamp.
So
Before we give a copy to the taxpayer, the treasurer also stamps the quietus.
Okay, so what is the treasurer getting as, are they just bringing the report of collections? Is that what they're taking to them, like the others?
Actually, the treasurer's getting nothing except for the money. So she is not getting anything telling her
What
where
fund?
What fund.
Oh, no.
Other than she gets a copy of the quietus back.
Okay,
with the fund
I
on it.
misunderstood that when you said that early. When you said you went to the treasurer's office with them,
no.
I was thinking that you were filling out the form and going with them.
No.
No,
The only way the treasurer gets a fund number is on the quietus, and that's how we balance at the end of the
yeah,
day.
they should, and if you look at the treasurer's receipt, it has a fund on it. The treasurer otherwise is receipting in money blindly without a fund. They should know what fund that's going into whenever they receipt the money into it, and that's where the direction from the auditor has to come from.
Okay, thank
So.
you.
Oops. Can't get through here.
We collect money for the auditor's ineligible deduction. There's a 30-day period at the beginning where the person who got the notice needs to bring their money to the auditor's office. At least that's how we were instructed, that we collect that ineligible amount that they were charged. And then after that, if they haven't come in, then we put that on their property record. And I just wanted to make sure that that is still correct. And then my second thing is, we're one of the last counties probably in the state that has a county home. And the superintendent brings the auditor's office the receipts for, and the checks for resident rent. And then we receipt that into a fund for the county home. And so I just wanted to make sure that that is okay, that we're collecting that money as well.
No. For the county home, they'd come in and it'd be the same thing, because the county home is essentially a department like any of the others. You would fill out the application to pay, say what fund it goes into, and they would take the money to the treasurer, and the treasurer would receipt it in. It's the same process. The ineligible, did you say it was homestead? So with this, I don't know that there's anything that says the auditor is to collect that, does it, in the statute, Lori?
I'd have to look it up.
Yeah. We'll look into that one as well, and if the statute says the auditor's to collect that, for the first 30 days only? Okay, well, but you had indicated they'd been sent a collection letter, is that correct? Okay. So are you just collecting it for the first 30 days then? Oh, okay. Not after that. All right, and we'll check on that and get the language for that and update that.
I think this goes back to what Pauline was asking. I know internal controls are the big hot topic. If the auditor doesn't actually verify the cash checks, how is that an internal control by the way the process is set up now? If the treasurer just tells me, we received $500, you need to go ahead and receipt it in, and I don't verify that, isn't that a lack of internal control?
It's not the auditor's job to verify the money that the treasurer collects. It's the auditor's job to tell the treasurer where to put the money at. The treasurer collects the money and says, this is how much money I got. And then, like I said, if there's a discrepancy, obviously the auditor and the treasurer are going to need to talk about it and see. I mean, if there's just one fund involved, you can only quietus in what the treasurer collected.
How would we know that there isn't a discrepancy on the treasurer's side? If they take in cash,
Well, the person who brought the money is going to be standing right in front of the treasurer and get a receipt. So if there's a discrepancy in what that person says, I would think that that person right there would deal with it. The communication still needs to happen between the auditor and the treasurer because you had initiated with a different amount. But that person isn't just going to drop money on the desk and walk off. So if there's an issue with, I'm bringing you $500 and the treasurer counts $450, that should be settled right there between the department and the treasurer as to, what the problem is. That's not really the auditor's problem as to whether that money is short when it gets to the treasurer's office. But you can only quietus in what the treasurer collects.
okay, so what if you, an internal control, what happens if you have, she and I are in cahoots together, and I'm bringing money to her to verify, she takes $20 out, we both know it, then we can budget. That's kind of where I'm going with the whole internal control.
I can't hear what she said.
Well, if you're in collusion, you could have two offices in collusion. The point of the internal control is a segregation of duties. The person is coming into you, whether it's a department head or an individual payer coming in to say, I want credit for paying this amount of money. So you do a preliminary receipt, quietus, application to pay, whatever you want to call it, unofficial quietus that says, I'm going to give you credit for paying $500. They go to the treasurer's office. The treasurer counts it now. Now you've got two people involved. Treasurer knows you're expecting $500 to be receipted. They count it. If it's not $450, they're going to say, you're only giving me $450. You're not going to get credit for $500 from the auditor or anyone else. Why is this only $450? If they say, oh, I screwed up, I left $50 at home, then they got to go back and get the application to pay, the pending quietus, whatever, changed to the correct amount. But if you're handling the money and the treasurer's handling the money, that's where the lack of segregation of duties comes in. Where is the custody? Who is responsible for that? The treasurer is responsible for getting that cash from the payer to the bank. You're responsible for getting that information from the payer to the fund.
Are there any more questions? Oh, here, Lori.
Oh, there's some over here too.
We need those little microphones you can just throw.
Our third party is the person who's coming to us and bringing us like $500 to quietus. We're counting that money in front of those people. We're doing the quietus. We're giving those people a copy as they stand there. We're taking the $500, putting the 2 copies of the quietus with that over to the treasurer's office. At the end of the night, when they do their reconciliation, though that money matches that quietus, they stamp off and give us our copy back. So there's 3 people. You've got the people who brought it. You're checking it, counting it with them. I mean, nobody has ever gave us $500 in cash and we've just taken their word for it and put a quietus for it. We've always counted it. That's just part of the internal control on our part. So I think that putting this extra step in there is actually causing more of it's not helping. I don't know how to put it. It's not helping.
If you're counting it, you don't have to. If you're counting the money, I mean, we're not going to take exception to that. However, it is the treasurer's receipt that says that money was received by the county, and I, as the treasurer, am accepting that this is the money I will deposit. And right, so there should not be, I mean, the reconciliation at the end of the reconciliation should be at the time that the money and the quietus process, the receipting process matches at the time, not the end of the day, not the end of the week, not next month when you're looking for it. It has to happen at that time. And you have to have your system keep a segregation between auditor posting the record, treasurer collecting the money.
Yeah.
I'm coming.
Well, you keep saying the treasurer receipt. Are we talking a hand receipt? What kind of receipt are we talking that the treasurer's doing?
The receipt could be, it just depends
Okay.
on your system.
Because-
It could be electronic or a hand post, a
Okay.
hand carbon
Yeah.
copy receipt or whatever. It's,
Okay, I don't know about everybody else, but as far as I know, we're on LAO, and as far as I know, the treasurer doesn't have the ability to do a receipt, just the auditor. So I was just kind of wondering.
The treasurer should have the ability to do a receipt, whether they do it on a manual or whether they
Yeah,
do it in
well,
the system.
they would have to do it
They are
manually.
collecting money. They should have the ability
Well,
to
and what they do,
not
and,
a quietus,
yeah.
but a receipt.
Okay, well, and we're like them, they bring the money to us, we count it, we do the quietus, but it's stamped by us, and then the money is taken over to the treasurer, she counts it, and then she stamps the quietus to confirm that that is the amount of money. So that quietus is then stamped by both of us, and we're both confirming that is the amount of money.
If you are walking the person over with the money, okay. If you're taking the money and taking it to the treasurer, no.
Okay.
If that person's left because you've said it's okay,
Oh,
that's
no,
not
we
right.
don't let that person, now, we don't walk the person over there, but we don't let them leave, because
can you use the
there's
microphone?
3 copies, there's 3 copies, and one of them is theirs, and they don't get it until both of us have stamped that. Yeah, so I don't know, but that's how we do it.
Not every county's doing that.
Oh, yeah, but no, that, they get a copy of the receipt that's been stamped by both of us, and then she gets a copy and we get a copy. So all 3 of us get a copy with both signatures on it.
And what I'm trying to say, what the treasurer takes is the custodian of the funds. So you do not want to take custody of that money. Don't walk it over yourself. Don't hold it till the end of the day. Don't say this is fine. You don't have the authority to take custody of that money for your county. Only the treasurer does. Now, if you want to duplicate efforts across, that's okay. If you want to walk over with the person, I don't have any problem with that. No, we don't have any problem with that. See, the stories that we're hearing, that we want to make sure everyone's clear on, is we're having, from both sides, we're having treasurers come call us and say, the auditor brought me over a report of collections and it's short. What do I do now? Well, it may have been sitting on somebody in the auditor's desk for a week. We don't know, and we don't know what their procedures are. So we're saying these are the procedures to make sure that should never have been left in the auditor's office. That should have been taken to the treasurer.
Yeah.
Yes, yes.
I just want to say this, I mean, what you're doing probably isn't totally wrong. The main issue here is, and this happened in a county where I became auditor, and it happened before I was auditor, but it did happen. They used to, a department used to bring the money in and lay it down on the desk and leave it, and then the auditor's office would receipt it when she decided she had time to do it and take it across to the treasurer. That person who was bringing that money up was accused and charged with fraud. And what happened was, when they were investigating her, she said, oh, I brought all that money up there. Somebody in the auditor's office must have taken it. So by just letting it lay there, what they're trying to say is don't let it lay there or don't hold on to it, because then then it's a he said, she said, when that fraud really does happen. And it was like almost $30,000 that this girl had taken because she just laid it down on the desk and then accused the auditor's office of it. So you're setting yourself up if you don't, in fact, make it go over to the treasurer, let her count it, and let them take it and not you leaving it on your desk.
And she's absolutely right. When you take that money, whether you take it over in 5 minutes or a half hour, or we take all the money over by the end of the day, as soon as it touches your hand, you are now party to that. So if anything, you're taking responsibility for the money, and it's not your responsibility to collect it. So why do you want to take on more responsibility than you already have? And that's the thing. There are plenty of balancing things with the treasurer and the auditor, and they're there for a reason, to make sure the cash agrees with the funds. And this is one of the processes to help, the communication between the two, to make sure. Oh, yeah. But that's all we're trying to communicate, is you're making yourself party to something that is not your responsibility. You're taking on more that is not your job. And when something does, it's all fine when everything works fine, but as her example, when it doesn't, now you're right in the middle of it. Whether you did anything wrong or right, it could have been someone in your office, it could have been the department, but now you're party to that. And if you just backed off, you can say, I never touched the money, the treasurer collects the money. If there's a problem, it's between the department and the treasurer. I don't have anything to do with it.
Okay, so for clarification, so we're talking about cash versus ACH. So when the ACH comes in, that goes directly to the treasurer. Then normally they call us and they say, okay, what fund does this go in? So as far as that goes, this is just cash only. The difference with the ACH is mainly at the point that it's in the deposit, they're telling you, hey, I got money in the bank. Then you start your application to pay. Hopefully you've gotten some notification of what that's supposed to be, so you can start the quietus. But there's no counting because it's already in the bank. Yes.
I pulled up an example of the form, and like I said, the form itself, this is the current prescribed form version. It was originally intended to be a carbon copy, so you fill it out once and then it copied through to other ones. So on the information it shows, applies to pay into the county treasurer, the fund, the amount, then there's the auditor's signature, whether it's cash, check, or money order. It's basically a receipt in 3 or 4 parts. It's just a different name on each of them, which helped to indicate where the forms went and the trail and who kept copies. The treasurer's receipt that we were talking about, this is the treasurer's receipt, and it would be signed by the treasurer, and then it says return this receipt to the county auditor. So it gave the instruction of take this to the county auditor. They'll verify the treasurer collected the money, now I can quietus it in, and you're done. Did we have a question back there? Lori? Just a second.
Yes, if your departments are leaving you money on your chairs, tell them to stop it immediately. Immediately. You're not going to accept it. They need to talk to you and talk to the treasurer. They are not to drop it in your, on your front desk or whatever. And what you need to tell them is until your treasurer receipts that in for deposit, they're responsible for that money, whether it's sitting on your chair or the front desk or a file in your back room. They're still responsible until custody transfers to the treasurer. If it comes up short, as Jackie was mentioning, they're the ones that are going to be on the hook for it.
Yeah, and that's something you want to make clear. Any office wants to make clear. You never just leave money. I don't care if the person's not at their desk and you don't have time to come back tomorrow. If you collected that money, that department did, they are to maintain custody of those funds until they can take it to the treasurer. They don't say, I don't have time, they're not in their office right now, they're out to lunch, here, take this and bring it over to them. It's not your job. Don't make it your job.
I've heard a lot of people say that they are hurt for time and they're worried about people bringing over the report of collections and having to do all this. One thing that's helped me is I requested an email. So they'll email me saying, I'm bringing my report of collections over at 1:30. They know my lunchtime. I know when they're coming. I can have it ready for them. They email me the amount of the check number. So I have all that information when they're coming over the report of collections, and that's been helpful for me.
Yeah, and that's what we said, you know, when we're going to talk to the software vendors, we're going to see what the system's capable of doing it. But that's something that each county has to figure out is what's the best process for you. An example of what she just showed, the departments can send the auditor the information. They could start that application to pay, and however it gets communicated to the treasurer, then the treasurer would have that information, and then the department could go directly to the treasurer because you've sent the application to pay to the treasurer either electronically or through the software system, and the treasurer can pull it up or look it up. So that's why we do need to get some more information from the vendors. We want to make this as simple as we can for you, but we don't want to lose that segregation of duties. We don't want to involve you in that collection of cash because statutorily it's not your responsibility to collect anything unless the statute says the auditor collects it. And we will do some more research on if there's anything else the statute says the auditor needs to collect. Like I said, our manuals are outdated, but we are currently working on updating them, so we'll get them up to date, and we'll get that list of fees for auditors updated as well. And we'll put out further communication after we've talked to the vendors about this and see what we can come up with. And again, talk to your associations as well, and see, you know, what everyone's doing to get control procedures. But controls are our biggest concern. She's been over here waving forever. You've just been ignoring her.
Her arm's tired.
Yeah, you got to get that hand up there, Gail.
Okay, I get the process, but what's confusing me is what we do, the department takes the report of collections to the treasurer signs off on the report of collections and brings it over to us. The report of collections already has the funds on it. We verify the funds at that point so that we don't touch any money. If the department brings the report of collections to us to verify the funds, they're going to have the money attached to the report of collections, and then if there's a check missing or a $20 bill missing or something, they're still going to say it was us. So,
well, tell them not to attach the cash to the report of collections then.
Well, I mean, the treasurer doesn't care what the funds are at that point. The treasurer's not giving them a receipt. The treasurer's just signing off on the report of collections and telling us how much is checks and how much is cash.
Well, that's the thing, though. The treasurer should be giving them a receipt.
Okay.
They should be giving them a receipt, and I'll show you.
Okay, because they're not doing that.
This is the prescribed form. And like I said, you don't have to use this exact form, but it needs to have this information on it. One of the information, the fund,
Right.
the amount, the type, cash collect,
But
check.
the report of collections has that on it.
But it's not a receipt. It's a report of collections.
Okay.
That's the thing. There are prescribed forms that are
Okay.
indicated for those purposes.
So this is part of the Paperwork Reduction Act.
Exactly.
And it doesn't, again, I know it sounds like more, but the report of collections is your department head's report, just like when you fill it out, saying, this is what I've collected, this is where I think it goes. It is not the start of the receipting process. The quietus is what you're posting your ledgers from, not from the report of collections. That's the basis, because they're telling you where they want that to go. It could be wrong. I'm sure you've seen them where they put them in the wrong fund or told you to put it in the wrong place, and you're like, that's not where it goes. So that's why your pending or unofficial quietus or whatever you call it is saying, here's where we're actually going to put it.
Yeah.
And that's the start of your receipting process.
The other thing, the other difference between using a report of collections, even though it has the same information, the receipt is a pre-numbered. Every time the treasurer, there's 1, 2, 3, 4, 5. So if they issued 5 receipts during the day, we've got 1 through 5. It accounts for all the money they collected. A report of collections, it's not there. They don't know. It leaves the office. It's not part of the record. It's not pre-numbered. It's not chronological. It's not an accountable item. And that's one of the reasons in this it says they need to be pre-numbered and generated in order, so that at the end of the day, if this is an electronic process for the treasurer, they'd be able to print their list of receipts for the day, and it would be there. And so that's in the same way with the quietus, the auditor can print their quietuses, but with the report of collections, it's kind of eliminating that process. Now, there may be, and like I said, when they enter that, when the treasurer enters it, I'm sure that the system is generating some sort of receipt number. So it's not that the treasurer doesn't have a receipt or receipting system, it's just that they may not be printing them and using those forms.
Okay, in the old Quietus book, okay, in the old book where application to pay was brought into the auditor's office, and the auditor put the fund number in and put the amount in and put the name to the treasurer,
Yeah.
and then carried that over to the treasurer's office, was the next form, was that the Quietus then? Because
No, the Quietus was the last form.
okay, but it was all one four-part form, which I think is where the confusion
Yes.
is, right?
Yes.
Because the treasurer, yeah, they're really responsible for the money, but we have to make sure that the funds are going to balance, that the ledgers are going to balance
Yeah,
on our
yeah.
side too.
The
So I-
Quietus didn't
Right.
get issued until that receipt came back from the treasurer and the auditor knew the treasurer had that money.
Right, right. So I think it's, I mean, we both have to do it. I mean, regardless of how it is, if we don't have our part in it, it's not going to be right. But the treasurer, yes, he's going to have that money and take it to the bank. And if he doesn't have the money, then we don't want to be standing in the middle between him and the person who
Yeah.
gave us the money.
Any more questions?
Or have we exhausted you? I know we've exhausted me.
Okay. All right, the last, on the community crossings, it's really just a statutorial update. And the main changes are there's the 50% match. Originally, it was a 50% match for all units. They've changed that so that towns with a population under 10,000 only have to have a 25% match. Also, it changed the funding source. So what we told you last year where you had to create that rainy day restricted funds, you do not need to do that anymore. You shouldn't have any money in those funds. If you didn't use them, they would return back to LRS or wherever, MVH or wherever you got it from. And then you can take them directly out of the funding source into the grant funds. The new one says the local match may come from any money the local unit is authorized to use for local road or bridge projects, as well as the special distribution of local income tax and money in the unit's rainy day fund. So it can come out of rainy day fund, it can come out of the special distribution fund, or any other fund that you're allowed to use it for local roads and bridges. So that's really the biggest change on that. So when you get your grant and you do your match, you don't do the jump through the rainy day restricted and then to the grant fund. You just take it directly from NVH or LRS or rainy day, and you transfer that money over to your grant, your matching portion, and then it stays there until you're done spending the grant. Which is basically the next slide, what I talked about. The one thing I will say, the community crossings, you should have a separate fund set up for that grant. We've had the question for the next year, do we need to set up a new fund for that? It depends. If you still have money in that community crossings grant fund and you're getting your new one, then you want to set up a new fund. You don't want to commingle your new money with old money. But my understanding is that they don't approve a new grant until you're done with the old grant. So that fund should be zeroed out. If it's zeroed out, you can use it for your new grant again. But you should not move new money into that fund if there's still money from a previous grant. Those grants need to be tracked separately each grant year. Question? What we got? We got question here and there.
Highway superintendent and I just had a conversation about this because he's using his LRS money and his highway money and his bridge money as match money for his projects that he's using for his community crossings money. And he said that they had told him, okay, are we supposed to transfer the money from the MVH fund and from the LRS fund and from the bridge fund? I think he's using that one too. Do we have to have appropriations to do that?
You would need to appropriate the money from the grant fund once it's moved in to spend it out of the grant fund. Now, if you had appropriated it out of there, but it's really a transfer, which typically is not appropriated. So we're not going to take exception if you've appropriated out of
MVH?
$100,000 out of MVH, and they've moved it out of there to here. We're just concerned that it's appropriated one or the other places, but really a transfer would not be appropriated. You would appropriate that out of the grant fund when you spend it.
Okay, now let me make sure I know what you just said, okay? Because, okay, he may be paying some of his match right now before he gets his other money, okay?
He should not be paying it directly out of the MVH fund.
Okay.
Not if
Okay.
it's for the project. You can start spending out of those grant funds even if there's no money in them, if the money is coming in. If you've already got your grant approved,
It's approved, but no money.
okay, then you should move your match in now.
Okay.
Once you
Okay.
get that approval, you know you're getting the grant money, you know you have to make a match, you move that match money into the grant fund. Now, here's the other thing, like you just said.
Right.
We know they're spending money out of funds, and then they get the project approved because they've already started spending it. You do not reimburse the fund when the money comes in. You need to move those expenses to the grant fund. Error correction. The expense shouldn't have came from here, it should have came from there. Move the expense from MVH to the grant fund if they've already spent money toward that project that they were approved for.
Okay.
So you want to move those so they show
Okay,
into the correct fund.
So the appropriation then is minused in one place, and then the new appropriation is in the grant fund, because that's what the expense would be.
We wouldn't
I
have a
mean-
problem with that. With this, when it comes to this grant fund versus
Yeah,
that, it's
It's confusing.
It is.
It is.
It is, because technically you are dedicating MVH money for this grant, but you're not spending it until you move it to the grant fund. So it's supposed to be appropriated when it's spent, but again, you're transferring for a match, and it doesn't really address that. So, but it
And
really
with
should.
the grant money, what we're going to be focusing on during audit, it was the grant spent on the project it was supposed to be spent on. So your local match money, you know, you get a grant approved for $1 million for X, Y, and Z projects. So everything that is spent on X, Y, and Z needs to come out of that grant fund. Your local match and your grant money, when you get it, goes into that fund. That's what we're going to look at. Can we tie all of those disbursements to X, Y, and Z? What Shannon is saying is if you originally appropriated $500,000 in MVH for Project X, you want to move it over to the grant fund along with the appropriation for Project X, we're not going to take exception to that. Okay?
The other thing I'd say about the Community Crossings grant, if you get to the end of the grant and there's still money in that grant fund, again, it's either a 50-50 match or it's a 25% match. So if it's a 50-50 and you've got money, half of it's yours, half of it's the state's. It goes back. The money shouldn't be sent there unless you get approval from NDOT to transfer that over to a new grant, and I've not heard anything about them allowing that. But I talked to one county and they said they wanted them to return the money, and then they would, you know, they're not, some grants will allow you to carry that money over to the new grant. From my understanding, that's not the way it's happening. So if you have money, you can get approval to expend it on possibly additional things related to that grant, but that's up to NDOT. But you need to contact them if you have money left in that fund. But remember, if you've moved your match money in, half of it's match money.